Hi, I'm the Chief Technology Officer, and these are the biggest flaws in the industry. I got into crypto in 2012. That's when I first heard about it and when I read the white paper. I didn't fully understand it, but I was interested. So I bought some, went up a lot, and I kind of forgot about it in the bear market between 2013 and 2016. Then in 2016, I actually, when I was working for a traditional bank, I then was, fascinated about the idea of smart contracts, decentralized, open finance already. I was thinking about that, and that's when I quit my traditional job and I went full-time into crypto since 2016. The thing that shocked me the most is probably that in 2017 there were a lot of scammers and a lot of people that were misusing this new technology, like it always happens. And what shocked me is that it seems the memory of people is just very short. The people that scammed and that didn't do things in a correct and honest way just kept on going, and this kind of was a bit shocking to me to see. But at the same time, I also actually realized that with all that action, it's just inevitable to have the good and the bad. And I think over time, the good always will win. So I think blockchain technology will be implemented for more good than evil in the long run. I'm a big fan of reg news, and I think that that's more of a white hacker group. There's some black hats, but I think overall the industry is more comprised of white hacks, and that also is such a blessing for the DeFi industry, because the DeFi industry itself is quite libertarian, so it attracts a certain crowd of idealists in the industry that would rather make this technology succeed than just destroy it for a little bit of financial gain. So that's a very good thing for the industry. What I see and what is interesting is that nowadays a lot of hacks and a lot of hackers that actually steal crypto, because it's a pseudo-anonymous technology, it's more incentivized for them to actually become white hacks. So the industry itself is turning black hats into white hats, because it's just like, well, you did this exploit, you maybe stole $100 million. Well, if you actually just return the funds or highlight the vulnerability, then you can get quite a nice reward for an exploit that you found, higher than in the traditional industry. Because let's say you hack a bank, and the bank is not going to just transfer you fiat; they would rather just throw you into jail. Whereas in crypto, if a hacker exploits a certain protocol, it's easy for that protocol to then give 10 Bitcoin to this person or something. It's just an easier transaction, and the hacker can actually stay anonymous and still report the hack. There's always vulnerabilities in any system, in any software system, but at the same time, we have been designed from the core to be nation-state resistant, and you can see that in Ethereum or Bitcoin. You can see that there's a clear design base where we were when we were designing it, that we are designing it so that no nation state can just kill it. It's designed from its core. But what I'm worried about indeed is certain parameters like USD Tether being just choked down or the fiat gateways being blocked. That's where they can hit us, and that's where the regulator also normally hits. The regulator. What a regulator normally does is it just it looks at the space. Okay, this is a new space, and it kind of fires a warning shot at the choke points. In our case, the fiat to crypto gateways or the stable coins that we use in our systems. There will be shots fired there, and they will try to choke and make it more stringent. But the government or any regulatory body doesn't have the manpower or the time to actually go after a whole industry. So we just need to make sure to build as much entry and access point into crypto as we can, and make ourselves a dragon with many hats, that when the government cuts off one, we just come back with 10 new heads. And I think that is very important to build in that way. So there is some crypto assets where I think that we now see this new layer 1 craze where we saw in 2017 with EOS when they raised a lot of money. There's now EOS version 2.0. I'm just like, well, we've been through this cycle, and there is some companies with just 3 or 4 people, I'm not going to name the exact names, that are saying that we're going to build a new blockchain. Well, it's a very hard thing to do. Only a small group of people in the world can actually do that. And yeah, so watch out when you're investing. Try to pick the main layer ones and start to maybe experiment a little bit. But just watch out, if there's no code, like in certain projects that have no code base which you can inspect, just don't invest in it until you really understand what it means and what it is. I think most people in the space actually have good intentions, but what I see happening, and they of course will not say that, it's just very tempting. And what I see around me is that there's a lot of smart developers that then suddenly gain a lot of value, almost millions of dollars, and then become corrupted in a way. We saw that with Armor Finance or other like insurance protocols or other protocols that are just being rug pulled by their founders, and I think that's something we need to be wary of. Yeah, so if you look in the code of Tether, it's like very obvious. There's like a blacklist, right? And that's one criticism. Like there's a blacklist in the stablecoin you use. I'm not sure if I feel that comfortable with using a coin like that. And it's also very dangerous for the whole DeFi system as a whole. It's like it's turning into one big spaghetti, and the core layer, one of the biggest stablecoins, USD Tether, has one, this blacklist function, and two, has a lot of printed USD Tethers, as we all know, and it's a little bit uncertain where that money or that actually fiat inflow actually came from and how they secure the one-to-one backing of that stablecoin. I think that's a big danger for the industry if that ever will implode or explode. Looking at the current financial system, there's also a lot of risk there with some certain markets, and Tether is one of the biggest buyers of commercial paper in the US right now, which is insane. And yeah, there is a definitely trickle-down risk of all these liquidity pools and all the curve pools and all the other pools that use USD Tether as a base, as a currency in their pools. If that ever goes out of whack, the whole market will just be pulled down. I think actually that bandit will be pulled off at some point. That will implode at some point. But the industry will actually survive from that. But that is a black swan that might happen. Not that it will destroy the whole ecosystem, but it will set us back. But it will not destroy us. Yeah, I think there is continuous risk for that, and I hope there will be a stablecoin that's one-to-one, transparently backed, and that the users can have a little bit more control over. That will, I think, make the industry more mature and over time harden the industry, and that's happening at a rapid pace as we speak. There are some really cool new projects coming out, and I think the industry will harden over time, and we will eventually become just a more transparent, open financial system where these risks are clearly visible. The risk of USD Tether losing its peg is just it's a clear risk in the industry, and it's maybe also why the interest rates are pretty high, because people see that risk, don't want to take that risk, and that's why there's maybe less capital in the system than there should be. Yeah, it's fascinating, right? It's like I always like to dig into the code, and you can learn a lot by seeing how it's written. Similar, if you read a book from an author, you can really see that author wrote it, even if he writes another book. You can see some styles in his way of using the code. Well, most fascinating code is actually the first releases of Bitcoin. There was a lot of things in there that eventually were removed in the original code base, which I kind of understand because there was a casino built into the first release of the Bitcoin code base. A very small subset. You could go into the code base, you can probably find it online, maybe you can leave a link to it, and then you can see this on the GitHub page, a repository for a casino game, for a roulette game, I think it was. And they removed that eventually out of that code base. But it was in the code base, so Satoshi, whoever that person or group of people is, clearly had a connection maybe with e-gaming business, I think. I do not think Craig Wright is Satoshi Nakamoto. I do think he was well connected, but it points definitely to a direction of somebody in the e-gaming or with e-gaming experience. And it also points that there was a lot of unfinished stuff in the code that kind of was removed. Like it's like unfinished, half finished, like a roulette, and there was also some accounting system based layer for it. So there was a lot of stuff that was kind of started but never really finished. So yeah, that's very interesting. I would recommend everybody to take a look at that.